Hello traders, Jeffrey here again with Strategic Day Traders, bringing you another week review of how we did this past week, a look at the news that occurred this past week, the markets coming up, what we're going to be looking out for and trading on. And as always, before we get started, all the information provided here is for educational purposes only and is not an offer or a recommendation to trade futures, stocks, options, or Forex. So for those of you that have been here before, you've seen an example of the parabolic price action chart that I like to use. For those of you that are new, this is what a typical trade, this is a short trade, looks like. This is my Nadaraya Watson envelope channel. I'm looking to take trades with pullbacks to the channel and then move in. So in this particular case, for a short, we're looking for a pullback up to the top of the channel and then a move down. So we get an entry here. We had a high probability target here, but in this case, the trade hadn't closed yet by the time I'm back in front of the computer, and I actually moved my target down to capture a nice additional number of pips. In this case, the first target was almost 97 pips. This is what the chart looks like on a MetaTrader chart. So for example, I'm looking to get in, if this is a long bias that I have, when we get close to the channel on the bottom. Ideally, if we have an outside bar indicated by an arrow or sometimes a triangle if you're on one of the other platforms, and we have a bounce off of one of the demand zones in this case, or if it's a short off of the supply zone, and we've been overbought and we're moving up out of the bottom channel for longs on the Williams percent R, that is an ideal trade, and we look for a fast trajectory or move to the opposite side of the channel for a high probability exit, first target. These are the indicators that I put on all of the charts. I keep things very simple. I'm monitoring the 28 major and minor currency pairs for movements to the outside of the channel, as well as the previous day's news reports and currency movements to see what my bias is, looking forward to the next 24 hours to see what the upcoming news is and what geopolitical events have happened and are presumed to be coming up. This is another view of the same strategy chart. And typically we enter either at market when my signals come out between 6 and 8 p.m. Eastern, or I will wait for the pullback. I prefer to wait on this, for example, short trade here. I prefer to wait for the pullback, entry, fast, high probability target. But sometimes we may see momentum candles, which are 2 or 3 candles in a row moving in the direction where the body completely engulfs the previous candle, or the body is greater than 50% of the total candle size. Those momentum candles give me an indication, along with the movement into the Williams channel, overbought, oversold, and potentially supply and demand zones, that I want to jump right in and not even wait for the pullback. You can always wait for the pullback. The only drawback is you might miss some trades from time to time because you won't get that pullback entry. Now, for those of you that have seen the Telegram channel, this is what my typical post looks like. So, for example, on this particular day, if we look at the post that comes out between 6 and 8 p.m. Eastern, let's say this Aussie Yen pair, the long entry was projected for you to get in ideally at around 95,802. And remember, you're always trying to account for spread, so you may actually put your trade a little bit back from the point 802 if the spread looks wide, so you have to analyze that. And then we got our entry here for a target number of pips of 46 and had a runner on this for a total of almost 100 pips for this particular trade. Now, here's what we saw this past week. It was a kind of a quiet news week with the U.S. elections, huge moves kind of giving a little bit back, and not that much news in the markets. As we start getting into the end of November, the U.S. has the Thanksgiving holiday. There have been some bank holidays as well. We had the Veterans Day holiday in the U.S., which was a bank holiday too. And we're starting to get into the December slight slowdown on some of the news releases, so we're going to keep an eye out for that. But we saw the Canadian CPI release this week, as well as UK, and some unemployment claims, which were potentially a little disappointing this past week. And here's how we did. As you can see, with the slight flattening in the market after the U.S. elections, we did have a number of no entries on several of the days. So if we don't get in, there are no momentum candles. That is no win, but no loss on that particular trade. And overall, we had a number of real good trades and days for a total of over 400 pips for the week. Only one stop out over here for just 5 pips, which is just fine. And over the course of the week, if you just traded 0.1 lots, you still had a several $100 profit. If you have a little bigger account, you can certainly move up to a half of a full lot size, and then did quite well. Now let's take a look at the week coming up. We have some Japanese central bank news, or one of the governors coming out to speak, and that's either going to be in the overnight coming up ahead today, or potentially again or instead of on Wednesday. So that's still tentative. They're going to release that. I'll keep an eye out for that. And then we're going to watch out for any trades that we're in the Canadian dollar as it comes into the Tuesday morning, because they've got their CPI results coming up, as well as the US dollar on Thursday for unemployment claims. This is what I've got on my board right in front of me to watch out for. So any trades that we're in Tuesday in the 8:30 hour on the Canadian dollar, or Wednesday on the pound in the overnight, the US dollar on Thursday in the morning, and the pound and the Canadian dollar again in the overnight on the pound and the Canadian dollar, I'm always going to watch out for, either to stay out of trades with those pairs with those currencies, or to make sure that we're closed out before any potential news releases. We don't want to sacrifice any gains for swift and volatile moves in the market. Even if it continues going in the right direction, those big volatile moves can often cause stop outs if you've already moved your stop loss closer to break even, or break even plus at the next supply or demand zone. So that's a wrap. Another good week. If you have any questions, feel free to email me, Jeffrey@strategicdaytraders.com. Feel free to go to the website to find out about our private members group. Only members in the channel get my trades in the evening before, and we're going to be starting some additional actionable trades during the daytime as well, and analysis of trades right around news events as we get forward and continue to build the group a little bit more. And so that is a wrap. Hope you have a good rest of the weekend and a good trading week, and we will see you in the next one.